a quarter in sort of the long-term trajectory of an economy that is turning around at an inflection point, it's not a big deal,
so
really.
So when does that inflection point come to the fore?
We think it's really the December-Jan period. And the economic core of the country, it starts from the agricultural sector. And what we have seen right now is that the reservoirs in India are at a 37% higher level than the long-term average. This is the highest water reserve we've had in 20 years, which is what gives the farmers a lot of confidence that the winter crop is going to be a bumper one. Better crop means more money in the pockets of farmers, which means more consumption.
And that's good news, as you say, given the importance of the agricultural sector. But are you worried at all still about some of the issues in the banking sector being unresolved, given how key that will be to any transmission mechanism of stimulus efforts on the way?
Absolutely. You can take a horse to water, you can't make it drink. I mean, the RBI has cut interest rates by 135 basis points, but the transmission has only been 49. And that's the big struggle. So I would rather see in the budget the banking sector getting resolved, the asset restructuring of the NBFCs get resolved, the Insolvency Bankruptcy Act get more efficient, rather than see income tax cuts or see long-term capital gain taxes cut. So this is where we really need to focus. Recapitalize the banks and make sure that lending flows through the economy again.
But how many times do you recap the banks? We've seen a series of recaps, right? Where does it end? How much good money do you put behind bad to get the banks back in health?
True, that's a great question. I would say you make it painful for banks when they stop making sufficient money. We just saw HDFC post some great numbers. So right now, the private sector banks in the country are eating the lunch of the government-owned banks. That needs to change. We had in 2017 more than 28 banks, public sector banks in the country. Right now, post-consolidation, we're down to 12. This period of consolidation, rationalization of the government-owned banks, it'll take a few quarters. And post then, you will see the public sector banks come back into the lending game.
So the interesting part in this budget is they're talking about a US-style TARP facility to be set up where they buy out some of the bad assets from banks, house them so that, you know, they're given a clean, positive, good credit lines, which can then, of course, lead to a pickup in lending activity. Will it work? Would you be assured if there is some sort of de-risking of their balance sheet by taking away the bad assets?
I should think so. I'm very encouraged. If you saw recently, even Divan Housing, their mortgage loans have started picking up again. So there is underlying demand simmering in the economic system of India, which needs essentially more loans. And a clean balance sheet is the best place to start.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.